Russell Williams here with Elliott Wave Source, number one source for Elliott Wave technical analysis. Today is July 10th, 2013, and today I will be covering two pairs for you guys, and that's the dollar yen and the Singapore dollar. And let's just start out with the dollar yen, currently on the hourly charts. And with this pair, we have been pushing higher for some time now, and now we're currently in that corrective phase as the wave has been starting to just correct a bit. So within this correction, it appears we're going to get a zigzag formation as we had 5 down for our larger A wave. Now we had the 3 up for the B wave, which has appeared to be completed, and both A and wave C are equal in distance. So now we are expecting that C wave. We also see a bounce off that 76.4% fib line, a 76.4% retracement actually, but that 0.236 fib line, which is 101.373. So price action flirted with that, and it's currently in that region, but we are expecting it to push a lot lower. Now targets for this pair lie at a 61.8% move of wave A, a 100% move of A, and then a 1.618% move of A as well. So first targets for this lie at 95.4, and then the second targets is at 91.6, and third but not least at 86. So you could see this pair push as low as 86 and as high as 95.4. Now as we jump down on the 30-minute charts, you see that price is currently found resistance at this ascending trend line, which have been intact for a little under a month now. Found some resistance there, but it also found resistance at that descending trend line we see above. So if price action does move back towards that descending trend line, it would be a good opportunity to enter the pair short, and then look for a break of this trend line. You could also see a break of that ascending trend line and then the retest, which would also be a good area to get short this pair. So one of those two things should give us a good area to enter short, and just look for this pair to push a lot lower, down with a break of 100 and down towards 96. Now as we shift gears over to the Singapore dollar, you see that this pair is in that corrective wave 4. So with this we had waves 1 through 3 completed. With the 3 wave we saw the spike in volume, and wave 3 actually did about 100% move of wave 1. So both waves equal in a distance, which if this impulsive group would have an extended wave, it would lie in wave 5. So now with these impulsive waves, we see that wave 2 retraced slightly beyond that 61.8% retracement rather, and it just flirted with that 76.4% retracement. That level is 123.7, and then we saw it shot up and did that 100% move. So that fourth wave we should see an inverse effect at that, and it should retrace to that when retraced 23.6%, so that 127.5 level. We could also see it just penetrate through a bit and then push higher, so do not rule that out. And then that move would coincide with that ascending trend line, so that would be a great area to actually get long this pair, which is at that ascending trend line, and then a stop would be somewhere in the region of wave 1, which would then make this count invalid. Once price action violates wave 1, then we should expect that this current 3 wave we have has not yet completed, and then it would be the extended wave within the group. So then the bias will still be to the upside, but we would just need to find another entry point. Now as we jump down on the 30-minute charts, just to take a closer look at that wave 4 formation, and just to see when it will end or if we can anticipate that, we see that we had wave A down, and then now we're currently working on wave B, which actually appeared to take the formation of a flat correction. So as we see, it's trading within a channel so far. We had 2 hits on the upside of the channel and then 2 hits on the downside. So we're expecting it to push higher to the upper bounds of the channel to complete that B wave, and then we should see that move downwards for that C. And then once we get a bounce off that trend line, look to go long and look for this pair to push a lot higher. Could do between 400 to 600 pips. Have not gathered the targets yet, but as we stated, it would either do the distance of one of the waves or the distance between the beginning of wave 1 and the end of wave 3. So that gives us between 400 and 600 pips. So once we get a bounce, then we can find out where the end of wave C is, and then we can put on a target on this pair. So thanks for watching the video today, guys. Any questions or comments, definitely feel free to jump in the chat room or shoot us an email, and we'll gladly go over any questions or comments you guys may have. So hopefully you guys have been trading well thus far, and enjoy the rest of the week trading.